Paul, we've gotten a lot of requests for Micron. Ticker symbol is MU. We're going to look at it today. We will look at the financials behind Micron. If you are new to investing, I don't know why I said that so weird, Paul, but if you are new to investing, I often in the past, Paul, would buy a stock, hope it went up in price. That was pretty much my analysis and due diligence.
Sick analysis.
It wasn't a winning process, but we'd like to take a look at Micron, the company, compare it to the actual stock price and see if it's justified. We like to buy great companies at a cheap valuation. We will see if that's the case with Micron. They make the RAM for PCs and servers. Paul, you know all about RAM. I beef up that RAM in every computer. I love the RAM. Do you know what I'm talking about?
I like having a lot of RAM. I do like, because obviously RAM, what it does is, I do know this about it.
Go on.
The more RAM you have, the more programs you can run more efficiently at any given time. It's random access memory. Is it random? Yeah, it's random. As you run programs, they need the RAM in order to run the programs at that time. So the more RAM you have, the faster your programs will run, and the more programs you can run.
I soup that up in every iMac that I get, and we will go over to.
So do I.
We will go over to Trader Mo and see if people are trading Micron at a quicker pace in that bid-ass nation with that handsome devil that is Mo. But Paul, let's use our 8-pillar analysis to see the financials behind Micron, baby. What's the market cap?
All right, guys, it's an $84 billion company. 5-year PE of only 13.5. That's a check mark there. We want it less than 22.5. The recent PE for the last year is 20.
That's okay.
No dividend. And the 5-year return on invested capital is kind of weak, 6.2%.
This is pillar number 2. Yeah, we want a 5-year return on invested capital.
Greater than 9%.
9%, right.
So far we have 1 check and 1 X. Pretty good profit margin here. So far I'm not, 5-year average free cash flow of $3 billion, but last year's was $560. I don't know why that is, maybe less sales, whatever it is. But okay, so far I'm not like totally turned off.
But not totally turned on, I assume?
Correct. I'm not totally turned on.
I've seen you fully torqued with some stocks. It's not this one yet. Pillar number 3 is revenue growth over the past 5 years.
17.4 billion to 25 billion. Now something interesting.
Go ahead.
17.4, 28, 27, 20, and 25. So even though it's a check mark, is this COVID related? Or was this a disposition of a company and then they bought another one? I don't know. But this is part of what we're trying to do when we look at these companies, is look at their financials and say, what is the story being told here? To me, I see acquisition here, because the chances of a company like this having this kind of revenue all along and then all of a sudden skyrocket tells me there's probably an acquisition. This drop, maybe they sold the division. I don't know.
Well, just through 3 pillars, I think this is probably a more deeper dive than 99.9% of the entire population has ever done on a simple stock.
Well, right? Of course. And doing very little to understand this is going to do monumental things for your portfolio. It literally will, over long periods of time, really increase the returns in your portfolio.
Pillar number 4 is profit growth over the past 5 years, baby cakes.
2.55 to 4.13, check mark. Uncle Seth, look at this.
Oh, wait a minute now. 2.5 to 12 billion dollars.
So what we're going to do here is I'm going to scroll up a little bit.
Tell me.
I'm going to go to other income. Where the heck is it?
Go on.
I'm looking.
Tickle me now.
Pre-tax income. Oh, wait, what?
Yeah, there you go. What's going on here,
I'm not
Paul?
seeing how this happened. Okay, well, this is obviously something to look at. Shares outstanding, Uncle Seth, 1.1 billion to 1.12 billion. It's an X, not by much, but it's still an X nonetheless. So that's what we got there. Now, guys, this software we created because all of our users said, how do we get the software you're using?
Yep.
It has all the 8 pillars. It has so much more. It has a mobile app, all 8 pillars, 30 years of financial data, stock analyzer tool, which you'll see later, exclusive daily content, access to all of us. Most importantly, though, it's over 6,200 people in our Discord that have access to our Discord, all for 87 cents a day. Guys, if you are serious about financial future and you're not wanting to pay 87 cents a day, less than a crappy cup of coffee, to be able to analyze stocks and get all of our software and talk to like-minded investors, I don't know what you're doing. $199 is our competitor, $199 and $35. We're 87 cents a day. This is a no-brainer. Click the link below or go to everythingmoney.com, sign up, and you're locked into that price forever.
Yeah, you can use this app on your phone on a daily basis, and all of us do, and a lot of our users do. We love it. So pillar number 6, Paul, this is total long-term liabilities divided by 5-year free cash flow, and what is under 5.
So we go to the 5-year free cash flow number on the main page. It's about $3 billion, multiplied by 5. So we want their total long-term liabilities to be less than $15 billion. Why? Very simple. Less debt means less likely to go under. Obviously, there's certain debt that's manageable and some that's not. I look at this number, I pick this metric out of looking at an average of the last 5 years and selecting 5. Does that mean this is the exact number? No, every industry is different, but it's a starting point. So we go to the balance sheet, scroll all the way to the bottom, $8.2 billion. So definite check there. We want it under 15, it's almost half that. That is great news. Now for the big mamma jamma, we have cash flow. Now remember guys, cash flow is cash from operations less your capital expenditures. You use this money to pay dividends, buy back shares, make acquisitions, and pay down debt.
And make Paul happy.
And make Paul happy because Paul likes cash flow. Now, on big companies, I especially like cash flow. What we do is we go back and we had 454 million to 560 million. That's a check mark. Okay, I don't like this, Uncle Seth.
Look at this nonsense now.
Yeah, I don't like this.
$500 million to $7 billion.
And then the average is 3. This is totally misleading. Ugh.
Yuck.
Yeah, I don't like this very much, Uncle Seth.
How
And then look at the previous years. So it is a check mark.
Bonkers.
And then 3 billion times 20 is a $60 billion market cap. What we do is we take the 5 years of free cash flow, multiply it by 20 as kind of like an idea of what do we want to pay for this company. And it's saying 60 billion, so that's an X. Guys, my personal opinion is I'm avoiding this company.
The market cap was 84, Paul.
Yeah, we're going to put it in the stock analyzer tool. If you see these 8 pillars here, you know, I don't know, because I look at this going, I like seeing consistency in numbers. I like seeing trends. To me, the more consistent the numbers, the easier it is to project out in the future.
Why have you not mentioned the price of the stock yet, Paul?
Because it's irrelevant. What I care about is the market cap, and the price of the stock is just a relation to how many shares they have outstanding.
Oh, you've never said it so eloquently like that.
That's it? I never said that?
Well, I mean, I guess you're right.
So if a company has 10 million, is worth 10 million, has 10 million shares, every share is $1.
Stock price
that
is
same
$1.
company, if another company that has $10 million market cap but has 1 million shares, it's $10. The average person will sit there and say, oh, $10 is bigger than 1. This company's more valuable. No, they're the exact same value. Market cap is what matters.
We'll head over to using the stock analyzer tool as a part of our software after we look at Trader Mo, the Egyptian dreamboat that is trading. What the hell stock are we talking about? Micron.
Downtrend for sure right now. It's a dog stock. So it's just coasting on the bottom. You know what a dog stock is? It's just a stock that moves down through the sweet spot, big downtrend, and then it just coasts along the bottom while the stock price just continuously declines. And that's the situation we're with Micron. Now, Micron's a big stock that's in a lot of people's portfolios, especially those financial planners and whatnot. So I do think that eventually they're going to get back to the point where they get a big influx of volume. But for that to happen,
look at that.
I mean, you're stuck below these 2 major moving averages. Your 200-day is on top of your 100. I mean, that's not a big thing for me, but that is significant in the world of momentum trading. So it's a negative inclination. But what we got to do with this, if I was you, I wouldn't even bother with it on that long-term chart. I would stay over here, try to catch these little runs where you can. Go ahead and swing trade it. Swing trading is going to benefit you a lot more in today's market than long-term trading will, just because you can get in and out and avoid these kind of volatile days, like what we're having today, Seth.
Ah, I see. Interesting. Paul, you have the stock analyzer tool. This company's financials are kind of all over the place. So give me.
I actually don't even want to type it in.
Not even worth it.
Because look at how wide-ranging all these numbers are. Like, to me, this is my opinion. And I'm not saying this is the right opinion. Every investor has a different outlook. Every value investor has a different opinion of what value is. Our fundamentals approach to things are the same. But I look at this saying there's so much going on here, so much up and down. The price to free cash flow is currently 150, but the PE is. I just look at it going, you know what? I'm not even going to look at it. But this analyzer tool is awesome. You can put in how many years you want, how many assumptions you want to do, fill in your assumptions, and it'll spit out a number. I'll just do it just to show you, but don't take any. This is the prices it sets to pay. Between 13 and 53 based on these assumptions.
So if you want a 12.5% return over the next 7 years, you
got to pay between 20 and 30 bucks.
You need to be paying $25 for this.
$25 a share.
Yeah.
Listen, and I wouldn't even I would put these with a grain of salt. If you really want Micron, you got to do a lot more due diligence to understand the company, the financials, listen to investor calls. do your research and then talk to people on our Discord. There's 6,200 people. Hey, I guarantee somebody here has looked at Micron. And as we grow further and further, 9 months ago, we had 20 people in the Discord.
Yeah.
Now we have 6,200. It's just, and then a year from now, we'll probably have 20,000. So there'll always be somebody to talk to about these things and bounce your ideas off of. I'm not saying that if somebody said to me right now, Paul, I like Micron, I'd be like, great, I just don't understand it. That's it.
Yeah, that's the take home that you've taught me over the past 3 years. If it's too bonkers and wonky, there's no reason to just keep pushing the issue. Just walk away and find something better. There's plenty of them out there. So I appreciate you, Paul, the sugarfoot that you are. I love you. And Mo as well. And you, the viewer. And of course, that community, I love you to death. And that's our take on Micron. Fondle thumbs up, and we will see you on the next video. Just click on the next video right now. It's right here. Just click on it. We'll watch it out.
Oh, and by the way, one other thing, it really helps us out a lot. Follow us on Instagram. It really helps feed our egos.
You need that too.
I do.
Click on the video next to you. Let's keep going. Love you.